Hi everyone. So I'll be going through the analysis today. Let's start with the dollar. On the dollar, overall, we are still bullish, and since this is the main driver for our other pairs, I think it's something that we should start with as well. So for the next week, I'm seeing two main scenarios. If we don't have any manipulation or any kind of unexpected news from Mr. President, then I think we should have two main cases. Let me actually zoom in 4 hours so you can see this clearly. Okay, so during the previous week, we have taken this sell side liquidity and we are currently reacting from this BC here. So my first case is that after this, the price just respects this 4 hour BC and will just go straight for the liquidity here. Um, of course, this wouldn't happen. This will not happen on Monday, but it will just pan out over the course of the week. The second scenario is that actually the price may go a little bit lower, so it can reach to the second BC here, which is the one I highlighted on the daily, and after that it can react and go for the buy side liquidity. I like this scenario more because usually we want to see some kind of a fake move, right? Just to trap the retail traders. So I'm leaning towards the second scenario more, just so that we have more buy side liquidity engineered before we try to go and sweep it. So yeah, overall looking bullish. And if you are trading dollar pairs, you can be looking to go long. Okay, my main pair, which is the gold. So we can see that the last week we created this big new week opening gap, which hasn't been filled yet. We just traded right below the consequent encroachment of this new week opening gap, and then we traded lower. We did not create any inefficiencies. These are actually just on the lower time frame. Let me remove them for now. But what we did is we broke this suspension block. So we had this suspension block here, which is now an inversion suspension block. So I am expecting the price to trade here into the lower half of this and then go lower, since we have really clear sell side liquidity, which is the previous monthly low and then the low from November 2025. So if we zoom in the 4 hour chart, we currently have this BC, which has been broken and could act as a inversion fair value gap. And we also have this CB, which has been broken and now is being reclaimed again. So overall, I just want to see how we open on Monday. Um, I'll try to assess if we have a new week opening gap. Just um, want to know how it looks like, and then we can see how we go from there. But overall, we are looking bearish on this, and this would be our first target. Okay, on Euro USD, since we just analyzed the dollar and the dollar is looking bullish, we should be looking bearish on Euro USD. So again, I have two scenarios. We can either go straight down for all these relative equal lows, sorry, or we can actually have a second case, which would be more ideal. So here we have the second case where the dollar trades down to this BC. So that would mean that On the euro, we would expect the euro trade up here to this CB before breaking down. And that is something I'll be looking forward to, because on the euro, we also have red folder news, which is the interest rate decision. This is on the 23rd, which is Thursday. So I'm actually expecting um, during the first 3 days, from Monday to Wednesday, for the price to go higher. And then once we get the interest rate decision here, I'm just assuming that the price will collapse and go for the liquidity down. Yeah, euro is looking nice. Let's move on. Okay, so for the GBP USD, I don't see anything clear. If you take a look at the daily chart, we have recently taken this sell side here, and then we reversed and we took this buy side. Since the dollar should be going up, we would ideally want to see the GBP USD go lower, right? But we have unemployment rate, we have inflation rate, and then we have the S&P global manufacturing. So this is all red folder news. And since we don't have any draw on liquidity besides from this, but that's not in confluence with the dollar, I think I'll just stay away from the GBP USD for the next week. Okay, moving on to the Aussie dollar. The Aussie dollar is actually pretty clean as well. It's in confluence with the US dollar. We recently broke this BC here when it didn't respect it, and then it just broke down. So that became an inversion fair value gap, right? Now we are trading back to it, and I'm just expecting the price to disrespect this CB here, which will then become an inversion fair value gap as well. And then from there, we just trade down and take this sell side liquidity. So Aussie dollar, something we should keep in mind, since it looks really clean and we might have a high probability trade here. Okay, next we have the Kiwi dollar. Again, not looking too clean, but if you take into account the dollar and its second scenario that I outlined, so trading down first to this BC and then going to the target, we have a similar case here on the Kiwi dollar, which is when dollar trades down, this will actually trade up to this CP. At the same time, taking this buy side liquidity, where we will expect reversal, right? So if you check the PDF that I recently sent you all, you'll see that this is like a zone we could potentially expect a reversal. So once we get a confirmation that the price wants to go lower, we can potentially enter for shorts. And since we don't really have clear sell side liquidity, what I would be targeting first is just the BC here, just the middle of it. So we would be expecting the price to just trade into it. And then I will just be, taking off partials, maybe leave a little bit to see if this BC gets broken. If it doesn't, then we can look for potential like re-entries. And if it does, again, then we could be expecting something like this, right? And then for this liquidity here. But yeah, since we don't have like relative equal lows, don't expecting anything too accurate regarding the targets for Kiwi dollar. Okay, last we have the NQ. Since a lot of you trade this, it's actually not available in my country, so I can't trade it. That's why I also have delayed data here. But I'll try my best to give you a general direction for the next week. Okay, so we see that on Friday, price actually took out this sell side liquidity and is currently reacting from the volume imbalance, right? If you look at this, you might see a potential reversal, but if you actually zoom down on 1 hour, even though it looks like we broke structure, right? Here, we don't really have any inefficiency. And since I don't see any inefficiency, I'm expecting price to actually go down one more time to maybe take this liquidity out, or to treat this as a rejection block, ICT rejection block. Okay, another thing I just want to point out for you to be cautious is, okay, on the upper side, we do have clear buy side liquidity, which can be a potential target, right? But I wouldn't expect this to be cleared during next week, maybe the week after. But what I want to point out is when we have a volume imbalances like this, just simply trading and leaving a wick isn't enough. If you study the inefficiencies, sorry, the volume imbalances in the past, you will actually see that most of the time it will be filled with a candle body, and that's what we want to see, right? So I am expecting for this actually to be traded down into, and then just want to see a body close here on the daily level, on the daily chart, and after that we can look for potential reversals. But before that, I wouldn't be confident in taking longs. Yeah. Anyway, 4 hours currently. Yeah, you can see on the 4 hours we are actually reacting again from this 4 hour CB. Currently, it's being respected, so we might assume that it'll just go down. The daily candle will just leave a body to fill this volume imbalance, and then we can look for bullish prices. But yeah, this looks very clean. This looks like a potential target. Okay, so that's all the analysis. So thanks, guys. If you have any questions, just leave a message in the group, and I'll take a look.